Today we're going to discuss a niche segment within the debt financing market, which is called venture debt financing, which in simple terms would mean financing to startups. What exactly is venture debt and how does it compare with its counterparts such as venture capital and commercial lending?
Venture debt, I would define it as a specialized form of debt financing, which caters to companies which are enabled by tech and have high or hyper growth potentials. Normally, commercial lending has typically catered to more traditional businesses and their banking needs.
Well, what is the current landscape of venture debt in India, and how do you think the future of this industry looks?
Right. So while there's been a lot of acceptability to venture debt in India, I think it's kind of barely scraped the surface here. We get growth participation in the company. We have more skin in the game.
Hi everyone. It's a very pleasant morning and we're back with yet another offbeat domain to discuss. My name is Divya Daga, a chartered accountant working in the financial services industry, and I am hosting today's session organized by Seekamentor, an IIM alumnus founded online platform that aims to make quality mentorship more accessible and personalized. If you're new to Seekamentor, we are a P2P platform with more than 120 experts from diverse industries. Over the last few months, we have helped over 5,000 students through our mentorship programs and initiatives collaborating with more than 40 institutions. We also have free resources and live courses, so you can book a one-on-one session with your preferred mentor today. If you're interested to know more, please check out the links below. Today, we're going to discuss a niche segment within the debt financing market, which is called venture debt financing, which in simple terms would mean financing to startups. And to understand this in detail, I welcome Mr. Abhijit Joshi, who is currently the Associate Director of Venture Debt in the very well-known debt financing company, venture debt financing company, Trifecta. So welcome, Abhijit. It is a pleasure to have you on board. And I'd really like, to know more about yourself. So please add on.
Hi, Divya. Good morning. First of all, thanks to Seekamentor and you for giving me this opportunity to come onto the platform and share my 2 pence on the venture debt industry and its use cases. A quick introduction about myself. I graduated from MBI in 2008, post which I've worked with the 2 largest private sector banks in India, ICICI and Kotak. So with ICICI, I started off with the private banking role, after which I moved into the corporate banking division. 2012 is when I joined Kotak, again in the corporate banking team. 2015 is when Kotak started a separate vertical to cater to startups and their banking needs. So I was heading the southern region for that. Worked there for 2 years, and then in 2017 moved on to this NBFC called Centrum, where again I was leading the startup funding practice. 2021 to now, it's been a year. I've been with Trifecta and take care of their Bangalore office. So it's been an exciting journey. So my interest with startups started way back in 2015. So it's been kind of a 7-year journey in this space.
Oh, that's great. So Abhijit, we've heard about venture capital and commercial lending, but venture debt is something that has recently picked up due to traction in the startup space, right? So, maybe for our conversation, we can split the topic into 2 parts. One would be the understanding of venture debt and its features, and second would be the understanding of the career space in this particular industry. So probably we can kickstart with the first question, which is what exactly is venture debt and how does it compare with its counterparts such as venture capital and commercial lending?
Sure. I think a great question to start the session. So venture debt, I would define it as a specialized form of debt financing, which caters to companies which are enabled by tech and have high or hyper growth potentials. So these companies are typically companies which are trying to solve some problem or pain point at meaningful scale, and they use tech at the core of all the products and services that they offer. So what happens is because they are typically catering to an unmet demand or serving an underpenetrated market, the scale up happens pretty fast. And in this journey, access to capital is very crucial. So I think venture debt caters to this need of capital by startups. To your second part of the question on how does it compare with a normal commercial lending or a venture capital, normally commercial lending has typically catered to more traditional businesses and their banking needs. while they in their own way are also catering to the startup space, I think their use cases are more restrictive in terms of end use. It's more short-term funding, faster return of capital, right? So they're not as generic in the end use as a venture debt. Coming to venture capital is equity financing, which is dilutive. So every time a founder raises venture capital, he ends up diluting his ownership in the company. Again, venture capital takes a longer term view on the company. They can invest in a company much earlier in their life cycle. They can go as early as seed. And by virtue of their ownership, they also get voting rights in the company, and in most cases, a board seat on the company, right? So it's much a longer term capital at a higher cost. But I would not say venture capital competes with venture debt. I think they complement each other at every stage in the journey, and I think they go more hand in hand.
Got it. Got it. And just to deep dive into how venture debt is structured. Okay, so probably the next question I'll break it into four parts. One is how exactly is the deal structured. Second, what are the use cases of venture debt? Third would be at what stage does a company lend to a startup, and fourth is what is the benefit for the startup to take venture debt?
Sure. So I'll first cover your question on how a venture debt is structured. So venture debt typically comes in the form of a general purpose growth capital term loan, which is of tenor anywhere between 2 to 3 years. It also comes with a built-in moratorium of 3 to 6 months on the principal. In terms of the commercials, it has a coupon or an interest plus a processing fee, which is similar to any of your traditional loans. However, what is different in a venture debt loan is there is also a component where, as a percentage of the loan amount, we subscribe to preference shares in the company, right? And this is typically at the share price of the round along with which we are providing the debt. So what this gives us is we get growth participation in the company. We have more skin in the game in the company, and this also gives us a longer term view on the company while providing debt for only 2 to 3 years. So in a way, how this is different from a traditional debt is in a traditional debt you might be only providing balance sheet, but here along with providing capital, you are also wear an investor hat because you are with the company for a longer tenure. So that's how it is structured. In terms of the use cases, I would say venture debt has a very generic end use. It could be used in a wide variety of use cases like operations, marketing costs, capex, acquisition funding, right? So it's general growth capital. That's how venture debt is structured. Coming to benefits, sorry, I think I'll answer the stage question first. So venture debt typically has lended itself to companies in the Series B stage and above. That's when they have a chunky revenue scale. They are scaling fast. They're adding more products. They're adding more verticals. But what's happened of late, you might have seen in the last 1 year, is companies are raising more capital at a Series A stage. They are scaling faster at Series A stage. So there are also use cases for venture debt at Series A. But however, at a Series A, it might be tranched down. So we could give a smaller tranche upfront and the second tranche based on the growth needs of the company and the corresponding capital needs of the company. So this is how it is structured in terms of stage. Coming to the last part of the question, which is benefits of venture debt. I feel venture debt kind of complements other sources of capital like a VC at a cheaper cost of borrowing. What it does is it gives founders access to a capital efficient pool of capital much early in their growth cycles. So what happens is if you raise some venture debt along with your equity, you can always maximize your return on equity, right? It also helps founders not dilute earlier, extend runway between two rounds, and hence it's like I already mentioned multiple times. It's a complementary source of capital to equity. So these are the benefits of venture debt.
Got it. Got it. Makes sense. And so the next question would be, what is the current landscape of venture debt in India, and how do you think the future of this industry looks?
Right. So while there's been a lot of acceptability to venture debt in India, I think it's kind of barely scraped the surface here. So if you look at globally, venture debt typically is at least 10% of the VC market, whereas in India, I feel it's somewhere in the mid-single digit, right? So if you look at the numbers specifically, the VC market is presently at 54,000 crore, and even if it grows conservatively at a CAGR of say 20%, by 2024 that's bound to be a 95,000 crore market. And if venture debt even caters to say 10% of that, we are at a 9,500 crore market size, right? And that is in 2024. And if I look at the cumulative deployment opportunity between now and then, it's somewhere close to 29,000 crore. So that shows you the amount of potential and scale there is for the venture debt industry in India. Secondly, I think there's been a lot more acceptability by founders on venture debt. And apart from the bread and butter kind of term loan which we have, there are a lot of more innovative products coming up. There are products or loans structured around SaaS companies. There are loans which cater to working capital needs of companies which could be inventory heavy, receivables heavy. So there's a lot more work to be done in the venture debt industry, a lot more innovation to be done. So I see a tremendous growth potential in the next 5 years for this.
That's interesting. Okay, now maybe we can get into the second part of our discussion, which is understanding the career landscape. So the first question there would be, if you could help us understand the roles and responsibilities of a venture debt analyst.
Yeah. Sure. So an analyst typically supports the team in end-to-end deal life cycle, but primarily his responsibilities would revolve around doing the due diligence, be it financial or strategic on a deal, supporting the partners and seniors in the deal. He would also get into preparation of internal memos and documents. Then he would also negotiate the transaction documents and do all the paperwork to close the deal. Apart from that, he or she will also be involved in reporting, in preparation of MIS, making investor update presentations, right? Apart from this, what they're also required to do is they have to be always abreast of what's happening in the market, in the startup ecosystem. They need to know what deals are happening. They need to know the competitive landscape, the market dynamics, margin profiles of different companies. What are the key markers and parameters that you need to use to due diligence every company? It could be companies across D2C, SaaS, EdTech, B2B, right? So an analyst is always kind of a person who has to be abreast with the market and know what are the parameters to be used for due diligence, right? So these are kind of the broad responsibilities an analyst has.
Understood. And so how does the career progression in this domain look like, and what are the career options one can foray into after having a decent experience in venture debt?
Right. So within the venture debt space, I think while a lot of the work that you do will be common across the hierarchy. So the hierarchy, while the nomenclature could be different across firms, it's usually analyst, then associate, then a director, then a partner. So as you grow in the firm, you will be expected to independently support deals with the partners, and as you take on more responsibilities, you will also have deal sourcing responsibilities, leading the deals end to end, negotiation of term sheets with clients, right? And then you get deployment responsibilities. There'll be a deployment responsibility mapped to you, right? So you're kind of a P&L leader, right, within the fund. And then as you grow higher, then you also start looking at investor relations, that is raising funds for our venture debt fund, right? So you also get into that role. Plus, you also get into the more strategic stuff, launch of new products, competition mapping, right? So this is how a typical career progression in a venture debt firm looks like. Coming to the second part of your question, what are the options that a venture debt career opens up to? So I think since a lot of the venture debt folks, so a lot of them also come from prior startup experience, they would have some operating experience in startups, and they would have looked at a lot of startups very closely in terms of their growth paths, in terms of their operational parameters, right? I've seen a lot of them also move into startups in growth strategy or business development roles. So that would be one option. Secondly, since you're also kind of wearing an investor hat and you're with the company for a longer tenure, a lot of the people also then move into the VC industry as equity investors, right? So I've seen myself in the VC industry. Then there's also this option of always going back to commercial banking, where you would be catering to banking needs of startups, right? The fourth option I feel is also where you could move on the investment banking side or the transaction advisory side, where you end up raising funds for startups. because you understand how they work, how the multiples are, how the comparables are in that industry. That's also an option. So these are some of the options that I see for a venture debt resource.
Got it. Got it. And this is the final question, which is any interview, resume, or upskilling tips that you may want to share with our audience.
Sure. So without being too preachy, I'll share my 2 pence on this. So in terms of resume, I always feel people put a lot of weightage on their past roles and responsibilities, what work they've done in the prior stints. While that needs to be there in the resume, I think equal weightage has to be given to what were your achievements in each of the roles and what those achievements, what kind of impact those achievements had on the respective organizations, right? So that's very important. So I feel that should be covered in every resume. Coming to interview tips, I feel you should just be yourself in an interview. Do not sugarcoat stuff. Speak freely, and play to your strengths in the interview. And also set the expectations right in the interview itself, right? And don't have those false airs around you, right? So be yourself. I think that's what will make an interview go well. Coming to upskilling, yes, upskilling is a very crucial part of your career journey because you need to be always in pace with how the industry is evolving. So I feel upskilling could be either through formal courses, certifications, or it could be through self-learning. You could read up a lot. There's so much material today on the web. So you could read up, you constantly upgrade your knowledge, right? And also again in upskilling, just don't read what is relevant today. If you want to be relevant with the industry, you should always think of what skill sets you need in the future, right? So you should also read up about the skill sets that you will need in the next 2 years, 3 years, if you want to be relevant to your organization. So upskilling should always be futuristic. That's what my thoughts are on upskilling.
Got it. I think that was a really interesting conversation, and you gave a lot of good insights, Abhijit.
Thanks a lot.
And this is also, a very less spoken topic. I mean, like, people generally speak about venture capital, investment banking, but venture debt is something that's also come up very recently in the market. So I think covering this would give our audience a very good perspective about this particular domain. And yeah, I think thank you so much, Abhijit, for your valuable time. And sorry about all the delays that happened on scheduling this, but I'm glad that this happened.
So my pleasure. Like I said, thanks for giving me this opportunity to share whatever 2 pence I had on this.
Yeah, sure.
So also I would just like to mention that I think you guys at Seekamentor are doing a great job of throwing light on the kind of non-conventional career paths that are there in the industry. So a lot of aspirants who just graduated from college would know what different career options they have, but they don't know what kind of skill sets they need to develop to get into such a career option. So I would definitely commend you for doing this taking this initiative and doing a great job on this. So I hope you cover many more industries and help many more career aspirants in the future.
Thank you so much for your kind words, Abhijit.
Right.
So we would, love to hear your suggestions on content on topic that you would like us to cover. Please do drop in the comment section. Seekamentor has planned a lot more interesting topics for the upcoming week, so stay tuned. And please do not forget to subscribe to this channel and follow us on LinkedIn. And also, Abhijit's LinkedIn profile would be in the section below. So please feel free to reach out to him on LinkedIn for any further information that you want to, and ensure that you do not miss out on any updates on the upcoming sessions. So thank you from all of us at Seekamentor. Have a great day, and I'm thanking Abhijit again for his time today.
Thanks, Divya. Thank you. Have a nice day.